I think this is a stock you look out 475, 500 is sort of the base case.
We can see Tesla stock, doubling again over the next 2 to 3 years. So, there's a lot of opportunity still in Tesla as it goes from, sort of a startup, shaky company into its mature profit growth stage, which could last a decade. So this could be a really long, fun ride, short term and long term. Of course, there's a lot of risk with Tesla, but they're changing the world.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. If you're tired from staying up all night watching the US election results, you're not alone. In this video, I'm going to react and add a few comments where I think it's relevant to some recent clips from Dan Ives and Gerber discussing Tesla's future, and also share a few comments on the US election. So let's get into it. But first, don't forget, if you'd like 3 free stocks, check out the link in the description to WeBull. Sign up, open a new account, deposit $100, you'll get 3 free stocks. 2 of them valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it.
Tell me about Tesla, because we're watching it today. It was jumping 6% in my last check, with news of a deal with Panasonic, and this is all about battery cells and faster capacity. Reportedly, Tesla, which right now is at 422. Where do you think Tesla's headed?
Yeah, and I think you've seen a lot of these tech stocks, Tesla included, they've kind of been on a treadmill to maybe trading slightly lower as we go through this period of risk off and maybe some anxiety going to the elections. I think this is a stock you look out 475, 500 is sort of the base case.
As I'm recording, Tesla stock around that 420, 421 mark. So Dan Ives implying over the next year, possibly 15-20% upside on Tesla stock in a base case.
Because ultimately, when you look at a Tesla in terms of EV demand, especially out of China, and you've seen NIO, a stock reacting real strongly there, it's only 3 to 4% penetration. And I think Tesla right now is on the precipice of just a demand spike, not just in China, but globally.
Speaking of demand exploding in China, here we are over on Twitter on JPR007's profile, does some great research into Tesla and EVs now. This isn't exactly a proclamation or a forecast for what will happen in the future, but this is an S-curve adoption rate. We're looking at battery electric vehicle penetration in China, actual versus forecast. So far, so good. This appears to be around where we are. Now, that burst in growth, of course, maybe you guys can doubt this. Maybe you guys think it's going to take 30, 40 years before EVs penetrate the majority of the market. But I personally think JP is really onto something here. I suspect we're going to see this growth, and this is exactly what Dan's talking about. EVs today in China, just a few percent of new vehicles, but it won't take long before that explodes to 10, 20, 30, 40, 50, 60, 70, 80%.
And that continues to be the call here over the next few years to play those secular themes. And where Tesla's visit, it's also profitable. That's also the key theme here in terms of potentially S&P 500 inclusion now finally on the horizon.
Quick shout out to the S&P 499 who still have yet to include Tesla despite the fact that Tesla became eligible over 3 months ago. What's going on, guys?
Congratulations, Elon and Tesla, for finally pushing out this version of Autopilot. And, this is the real deal here. This allows cars to drive on the streets, make intelligent decisions, turn at intersections and stoplights and things, and basically take you from door to door. So it's not quite ready yet. So they've slowed it down, and it is a beta version. So they're letting, a few users really get their, hands on this thing and test it. And that's how it builds its knowledge through the neural net, through its AI learning of what's actually happening in the system. So this is the beginning of really an exciting time for autonomy and Tesla as we now begin to break on through to the other side.
If you're not keeping up to date with the progress on Tesla's release of full self-driving beta, you are really missing a trick. The rate of improvement is astonishing. The capabilities, jaw-dropping. Of course, there's still a few kinks to iron out. That's the entire point of a beta release, but progress is incredibly impressive.
For so long, Elon had been talking about getting to a sustainable position for the company where they wouldn't need capital, they would be cash flow positive, and they would be able to grow their business rapidly without needing to tap capital markets. And he's finally done it, adding $14 billion of liquidity onto the balance sheet with a real smart capital raise. They've got the Gigafactories in Berlin and in Austin, being built as we speak, as well as the expansion of China, which has been hugely successful and not talked about enough in the US, is how successful the China factory has become, and what a huge contributor to deliveries. And so now Tesla is that company, and it's really exciting because I think now Tesla, is the big company. It's an over $400 billion company, but it moves on to the next stage as they now build out their global domination of EVs and add autonomy into the mix.
All right, now Tesla said earlier this month that it produced a record number of vehicles and deliveries, as you mentioned, in the quarter, and it's now aiming at 500,000 deliveries for 2020. It felt like quite a far-fetched goal earlier in the year, but now it seems very realistic. Do you believe it's going to achieve its target?
Yeah, I mean, I think it's going to be right around that number, and I don't care quarter to quarter too much. I think the bigger trend is that, Elon kind of confirmed next year we're looking at probably 800,000 cars in 2021. It could be 1 million cars, and with what the capacity they're building in 3 years, I estimate they'll be doing 2 million cars.
I'm definitely with Ross on this one. Next year, my estimate for Tesla delivery is just over 1 million. 2022, just under 2 million.
When you start extrapolating that out, we can see Tesla stock, doubling again over the next 2 to 3 years. So, there's a lot of opportunity still in Tesla as it goes from, sort of a startup, shaky company into its mature profit growth stage, which could last a decade. So this could be a really long, fun ride, short term and long term. Of course, there's a lot of risk with Tesla, but they're changing the world.
I just want to take a moment here to acknowledge that Tesla genuinely are changing the world. There's very few companies that can say this in a really meaningful way. I mean, Tesla is literally disrupting and displacing internal combustion engine vehicles, helping the world transition to sustainable energy. Never mind the fact that the actual products they produce are vastly superior in a number of ways: safety, performance, total cost of ownership as well. This is a winning combination. This isn't hyperbole here from Ross. This is a serious statement. Tesla really are changing the world.
Tesla has a shareholder base of people who won't sell the stock. And a lot of that base won't sell under any circumstances.
Ross has absolutely nailed it here. I count myself among those Tesla shareholders who will not be selling shares under any circumstances anytime soon. Let me know in the comments if you're also one of these shareholders. This is a very important point. I can't think of any other stocks that I personally know of where there's such a large proportion of shareholders who have such conviction in the company and such a long-term vision that they will not sell shares anytime soon.
And that creates sort of a bottom here where it just can't go lower, because who's going to sell the stock? All the sellers sold a year ago at the bottom. And so the only sellers are really the traders, or the people who aren't long-term investors in Tesla. So the way I look at Tesla is that this is a great stock to own for the long term. It's a bit expensive because the market is, but on any pullbacks, especially if we can get the stock under 400, we're buyers of Tesla, and we think it's the most exciting opportunity over the next decade in the stock market.
As most of you will know, I'm a buyer whenever I have spare money, to be honest, but I certainly wasn't complaining earlier this week when I was buying in the high 300s. You can see my transactions for those of you that are following along on the video. See my transactions, purchase prices for all the stocks in my portfolio. It's pretty much been Tesla since November 2017. You can see all those buy prices all split adjusted.
So there's one thing that people don't get. It's when people invent new things. And Tesla invented a new battery. It started with the cell development and how a cell is built and what goes into a cell, to how the cell is manufactured, all the way on through to building battery packs completely differently than everybody else. This is one of the greatest innovations we've seen since the computer chip. When has anybody rebuilt a battery? We've been using the same Duracells forever. So the fact of the matter is that this battery production facility is just an enormous opportunity for Tesla. It's huge. And so as they now are vertically integrated and grow from, essentially, taking the raw materials in one end of the factory and coming out with a car at the other end of the factory, they're actually becoming completely self-sufficient and being able to manufacture the highest density, powerful batteries ever created. And so everybody else is going to be using old battery technology except for Tesla, and that gives Tesla a huge edge. And we don't really know what the range and capabilities of these batteries are, because they haven't really been built yet. So now that it's being built, the potential is enormous. So we think they're anywhere from 5 to 10 times better than the current battery systems. And this is a game changer.
Do you think that the company is likely to start doing more and more of its own lithium mining?
Well, they are. I mean, we know that they've, at least from what I think, is that they've already locked up, contracts, long-term contracts with suppliers for lithium and other core materials that they're building. They're also trying to move away from the harder to develop, and mine types of metals to metals that are cheaper and easier to mine. But we have no fear of Tesla's ability to get raw material. There's plenty of these materials in the earth to use, and they just need to get it out in, I think, a clean manner. But other than that, Tesla's already locked this all up. So people underestimate Elon's vision constantly. He's thinking 10 years ahead. He's already locked it all up. So, Tesla is so far ahead of everybody. Actually, they are the only one. They're just the only player.
Ross is absolutely spot on here. It's I was going to say it's a one-horse race, but yeah, horse, car, EV, it's probably a bad analogy to use, but he's got a point. It's literally Tesla and nobody else at this point in time. Very rare to see in business, but it's a fact.
People have to understand, Tesla's not running their business to be max profitable. Elon says this all the time. I don't want them to be maximum profitable. What I want them to do is invest for growth. I want to see revenue growth. I want to see factories being built. I want to see production going up, because in the end, they can always turn the lever of profits on when they want to. But right now, it's like Amazon 20 years ago. It's just 100% investment into growth. So they control what they're spending, very much so. And they're very focused. And Elon talked about this yesterday, making sure they don't waste money, that they're investing intelligently the capital that they have, and they don't get lazy doing this. And I think, the bottom line is, they're in great shape right now. They're just in great shape.
That smile says it all, really. And Ross makes a great point here. A year or so ago, most people who weren't paying a huge amount of attention as to how Tesla was managing their capital thought that they were losing money, that they were an unsustainable business, and they were headed to bankruptcy. Of course, those with a little bit more vision and patience to actually look at the company and understand it in a little bit more detail, realize what was happening, invest now, future growth, bringing costs down, etc. But now Tesla's at a point where they have so much cash coming in that they will literally be profitable effectively every quarter moving forward, despite the fact that they're aggressively investing in growth and trying to scale as fast as possible. They'll still be profitable while doing this moving forward.
So Tesla has a couple advantages because of coronavirus. Number one, they've been pushing down the cost of vehicles, not up. So, as they get cost savings, they push that on to the consumer. So prices have been going down for most of the Tesla models over the last couple years as they get more efficient. So they pass on, those savings to the consumer. Number two, it's the only place you can digitally buy a car online from your phone. So they're the only way, if you want to buy a car on your phone, is through Tesla. So here we are in the digital revolution. Every other car company still got these dealerships that stink. And if you want to buy a car, you just go online and buy one on Tesla and just go pick it up. There's no humans involved. So that's a huge thing just in the digital era. And then the third thing, which I think is actually the cost of ownership of an electric vehicle is almost nothing. And so when you think about paying $80 to fill up your gas tank, or in London, it's probably 100, and then you convert to pounds or whatever currency you're using. And you're like, wow, it's like 200, it's like 50 pounds just to fill up a gas tank. And when you have an electric vehicle, it almost costs nothing. So your cost of operation goes down over time. Plus, you don't have oil changes and brakes replacements and all this kind of stuff. So during a recession, it actually makes a ton of sense to own an EV vehicle. And that's irrelevant for the environment, just solely for the cost savings. So ever since my wife and I got electric vehicles, we can't even tell the difference on our electric bill, and I'm like, this is amazing. We have two amazing cars that cost way less to operate than what we used to with our ICE vehicles. So I think they do okay. I think they do fine.
Just talk to us a bit about the importance of the Chinese market and the Gigafactory in Shanghai as well.
See, Americans don't like when our lack of intelligence allows our competitors to make smarter investments in the future of technology, which is what China has done in EVs. And so as America's dithered around trying to support coal and oil under the Trump administration, the Chinese have gone all in on EVs, and they've been supporting EV makers in China, and they're supporting Tesla in China because they wanted to have the most advanced EV factory in the world built in China, and that's where it is. Fremont is a kind of a mess compared to the China factory, which is kind of a masterpiece. So not only do they have more efficiency and cost control in China, their labor costs are substantially less. And now that factory's pumping up, and the Asian demand for EVs is enormous because they also have health issues because of all the pollution. And then actually have oil, so they have to import oil in China. So it's super efficient for them to be the leader here. They're the leader in EVs. Tesla is the leader in China in EVs. This is the real story. Dan Ives is right. There's going to be enormous growth. Now they're exporting EVs from China to Europe, and that's a hugely profitable trade, making something in China and then selling it in Europe. So yeah, this is going to drive profits and growth for a long time for Tesla, and they own 100% of the factory, the only company in America that owns 100% of their Chinese factory.
A number of great points here from Ross, and I just want to expand on the China margins. I think a lot of people are overlooking the impact of the margins in China. At this point in time, the Shanghai Gigafactory output, let's call it around 200,000 vehicles per year. Tesla has stated that over time, this will scale up to 1 million vehicles per year. The margins on Chinese-made vehicles are much better. The reasons being lower costs of labor, lower parts costs, lower materials costs. They've got localization of the supply chain, and vehicles from China can actually be shipped by rail into Europe, which also can save on freight costs. So there's a compounding effect here. I don't think a lot of people are accounting for these massive margins from Chinese-made vehicles being sold in both China and in Europe. Finally, as promised, just a few thoughts on the potential outcome of the US election. At this point in time, things are extremely tight in Michigan, Wisconsin, and Nevada. However, it does look like a Democratic win, but we won't know for at least a few hours, perhaps days or weeks, as things are very, very tight in those key states. The great news, however, is that in either case, Tesla wins. Some of you might be like, wait, what the f***, dude? Hang on, Biden, EV incentives, tax credit, what are you talking about, you moron? Well, here's the thing. Remember how Tesla can't make enough vehicles and products to meet its existing demand? They're production constrained. So their products being cheaper to consumers won't actually enable them to sell more than they can produce at this point in time. So in theory, it would help spur demand, but Tesla's already unable to meet existing demand, so this isn't necessarily going to help Tesla. But what it will do is allow them to stockpile even more cash. But again, not enormously important. I know this sounds a little bit crazy, but Tesla can't spend the money fast enough as it is. So meaning they're making additional profits on their vehicles because of incentives, these kind of things, isn't actually going to further their mission over the short or medium term, maybe super long term. But as I've talked about in the past, Tesla now is making billions of dollars of profits per quarter. This is only growing over time. They're never going to be able to spend their cash fast enough. So hey, the incentives aren't necessary to help Tesla. Either outcome, they win. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Don't forget, if you'd like 3 free stocks, check out the link in the description to WeBull. Sign up, open a new account, deposit $100. You'll get 3 free stocks. 2 of them value between $8 and $1,600 each. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.